With the stock market hitting new all-time highs every single week, a lot of people are starting to wonder if these stock valuations are way too high and if this is just one big bubble waiting to pop. Hey, what's going on, guys? Welcome back to the channel. In today's video, I'm going to be going over 5 key points that I think you should be paying attention to hopefully give you a better perspective on our current market environment. Even though you might have a feeling that this is all just one big bubble that could come crashing down at any point, there are a good amount of bullish signals beneath the surface that I think you should take into consideration. So I'm going to quickly hit on a few of those and kind of just explain where I think the market's headed from here and how it's going to play out over the next couple months. So if you guys are new here, I make new videos every single week about investing and trading in the stock market. So make sure to go down and hit that subscribe button. And if you wouldn't mind just absolutely destroying the like button, Graham Stephan style, I would really appreciate it. But anyways, the first thing that I want to hit on is the volatility of the market. And the volatility index is essentially the fear gauge for the market. So when you have a higher level of volatility, that means that there's just more uncertainty in the market. And that's kind of when you can see these pretty aggressive price swings and even at times some pretty significant sell-offs. But when the market's at a lower level of volatility, that's generally just a safer market environment to invest in. And this can be tracked with ticker symbol VIX or the VIX. So I'll pop that up on my screen right now for you guys to take a look at. All right, so here is the 1-year chart on the VIX. And for those of you wondering, this is TD Ameritrade's Thinkorswim platform. But what you can see from this chart is that for the better half of the year, volatility has been breaking down, but just this past week, we broke below 20, which is a level that we really haven't seen since this first crash in March. And this is a very bullish signal for the market because, what you want to see is the market rising on falling volatility. And even though that's kind of what we've seen for the past couple months, volatility was still in the mid-20s, which is historically at a pretty high level. So now that we broke below 20 or heading down into the teens, that's definitely a very good sign for the markets. And now it shows us that we're really just heading into what's historically known as a pretty big bull market. And if this trend in volatility continues and we see the VIX break down towards 15 or break down even towards 10 from that point, then stocks and asset prices in general are absolutely going to rip to new highs, whether you think it's a bubble or not. And yes, we have seen and will continue to see some random spikes in volatility where the market corrects a little bit. But in this case, the trend is your friend, and this breakdown in volatility is definitely one of the major macro trends right now. So next on the list is another big bull signal with corporate earnings. And during the pandemic, there was a major decline in earnings growth for the majority of companies just because of all of the complications that they had to face and all of the negative impacts from the pandemic. However, we are now finally starting to see a major pickup in earnings growth as these companies start to get their businesses back on track. And here's a list that shows the sales and earnings growth for every sector of the market. But if you look at the top right-hand corner, you can see earnings growth for all the companies in the S&P 500 is up 6.5%. And so far, 368 out of the 500 companies in the S&P have reported. And there's also a big week of earnings coming up this week, but just based off of what we've seen, there's been a huge earnings growth across the board for pretty much every single industry. And you also have to remember that the numbers that we're seeing right now are from the fourth quarter of last year. So now you have to think about what's going to happen when we start to see earnings roll out from Q1 and Q2 of this year. So this earnings growth that we're already seeing right now is definitely a bullish signal and something that I would only expect to continue and even go even higher into Q1 and Q2. And the third point that I want to hit on is that this is not just a US stock market bubble, as this is a huge global move. This is probably something that most people, especially new investors, don't pay attention to. But when you look at our market and then compare it to all of the different global markets, it's all connected in some way. Some of the biggest markets around the world, like the Nikkei, the Kospi, DAX, FTSE, are all ripping to new highs. So what we're seeing here in the US stock market or the S&P 500 isn't some outlier, and we're not the only ones with crazy high valuations for stocks like the media might put it out to be. So if we saw the US stock market at all-time highs, and then we looked at the global markets around the world and saw that they were all in crash mode and dealing with these negative impacts from COVID, then that might raise a couple red flags, but this just isn't really the case right now. So all these major markets hitting new highs on falling volatility confirms that it's a global market move and it's a global bull run, and it's not just something that we're seeing here in the S&P 500. And the fourth point here has to do with another pretty big macro trend that I touch on a lot here on the channel, but that is the devaluation of our dollar. Similar to the volatility index, our dollar has been losing its value since the peak in March and has been bullish for other asset prices in general, especially those that are sensitive to inflation. The CRB index, or commodities index, has also been making new highs as a result of this inflationary market. So far, oil and energy stocks that are very sensitive to inflation are up like 20% year to date. So this clearly just shows that assets like this are inflating with this down dollar. And here's a chart just to give you another visual comparing the dollar, which is on top, to the S&P 500 on the bottom, and you can clearly see they have an extremely high correlation here. And another way to look at this is really just to think about what happens when the Fed just continues to pump money into circulation and into the economy. People and major companies are now forced to find different assets to invest in, because why would they hold on to cash that's quite literally just burning a hole in their pocket and losing its value every day? And this trend and devaluation of the dollar is only going to continue from here with all the stimulus and more money just being pumped into the economy. And that brings me to my last point, which deals with all of the fiscal stimulus. The Senate is currently working on another $1.9 trillion stimulus package, and that's only going to help drive asset prices higher. And we saw how the last two stimulus packages affected the market. So now that we have another one coming paired with an extreme low level of volatility, inflation, and an acceleration in corporate earnings, I see a ton of upside for the next couple months. And people are always going to have their opinions and different valuations, but these are just a few things that I think you should take into consideration. And there's always going to be skeptics and people calling for the next market crash, especially when we're at all-time highs. So you really just have to look at what's going on in the market right now and look at all the numbers instead of just trying to call every single top or bottom because you think there should be a correction. And as I said, everybody is always going to have their own opinion on whether a stock is too expensive or too cheap, but at the end of the day, that's just their opinion. And if you've ever been on the wrong side of the market, you know that the market doesn't care about your personal stock valuation. So those are just some of my thoughts, but I think we have a very bullish setup for the next couple months. But let me know what you guys think in the comments below. And as always, if you want to see more videos like this, make sure to leave a like. But thank you guys for watching all the way to the end, and I'll see you guys next time. Peace.